Hi there, hope you're doing great today. In today's quick video, I wanted to share a few recent observations from conversations I had with a number of passive investors that all ultimately boil down to the concept of LP or limited partner, passive investor, diligence, and steps one can take upfront. As usual, our videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So let's begin. Some of the conversations I've had recently unfortunately have pertained to situations where the limited partners were dealing regrettably with capital calls. There was another situation where a limited partner reached out to me for a potential new deal opportunity that they were trying to digest. And one common denominator with both of these were the extremely high investment returns. In one case, the LP had decided to move forward, but one thing I wanted to mention is, as you evaluate, or at least as I evaluate investment opportunities, and I'm just sharing my own experience and how I arrived at the conclusion, is to evaluate the numbers on a risk-adjusted basis. So higher returns doesn't necessarily mean that the investment is better. And as one of my mentors, Anthony Vicino, once said, numbers don't lie, but I can make them look anything I want. So make sure you understand the underlying risk and make sure you understand the underlying assumptions that went into arriving at those returns and valuations. Another thing that I commonly observe is that passive investors don't necessarily read the private placement memorandum. Now, I recognize this is not bedtime reading. It's a 200-page document of legalese, but it's important to read and understand because it covers concepts like the key risks, how distributions and pref returns are structured, if there is a pref return at all, how frequently you will receive distributions, how are management decisions taken and the voting power assigned and distributed, how are capital calls going to be handled, and in some cases the way they're structured can be quite punitive, as unfortunately was the case with my friend. Again, if you ask the sponsor, they should be able to walk you through those up front, but I advise to have, especially if you don't feel comfortable reading legal agreements. Now, I do have some background by virtue of my commercial lending experience and such, but as well as investment experience. But if you don't feel comfortable reviewing those documents, hire an attorney who can help walk you through that and be that second set of eyes and call out questions that you should ask or things you should pay attention to. So it's important to ask those questions up front because, again, that's one way you manage and mitigate risk up front. Measure twice, cut once. So we hope you found today's video helpful, and if you did, please like, share, and subscribe, and we'll see you at the next one.